Ever wondered if you can juggle a full-time job and a side hustle at the same time? The answer is a resounding yes. Many people are already doing it, working 9 to 5 while selling online on weekends, tutoring in the evenings, or running a small consultancy in their spare time. But here's where it gets interesting. While there are no legal barriers to holding down a job and running a business simultaneously, the devil is in the details. How do these two worlds interact? And what does your employment contract say about moonlighting? Let's dive in. Telling the taxman about your side gig. First things first, HMRC isn't concerned with whether you have one job or several. They just want to know about every penny you earn. If your side business brings in £1,000 or less in a tax year, you can usually take advantage of the trading allowance, meaning you don't need to register for self-assessment. But once your trading income crosses that £1,000 threshold, you're required to register with HMRC and declare it. This involves signing up for self-assessment, while your employer continues to deduct tax and national insurance via payee. Your self-employed income is then added on top when you file your annual tax return. Miss the deadline? HMRC can hit you with a penalty. The key date to remember is 5th October following the end of the tax year you started trading. For instance, if you began earning self-employed income in June 2025, you must register by 5th October 2026. Tax and national insurance. The double whammy. Here's where it gets a bit tricky. Your employment income is handled through the payee system, but your self-employed earnings are taxed separately. At the end of the year, HMRC combines these figures to calculate any additional tax and national insurance you owe. As an employee, you pay Class 1 national insurance through your employer's payroll. But as a sole trader, you're also on the hook for Class 4 contributions, which are a percentage of your profits. This often catches new traders off guard. Paying NIC through your job doesn't cover your self-employed income. And this is the part most people miss. You could end up paying too much or too little, depending on how HMRC adjusts your tax code. Speaking of tax codes, once HMRC knows about your self-employed income, they might tweak your PAYE tax code to collect some of the extra tax throughout the year. While this can work in your favor, it's not always accurate. You might overpay and reclaim the excess later, or underpay and face a bill when you file your return. Codes like BR, basic rate applied to all income, or K, used when you owe tax from other sources, are common in these situations. Always double-check your code against your expected income and question it if something seems off. What does your employment contract say? Hey, MRC is fine with side businesses, your employer might not be. Many contracts include clauses that prohibit outside work without written consent, restrict activities that compete with the employer's business, or ban anything that could harm their reputation. Breaking these rules can lead to disciplinary action even if you're paying the right tax. If you're unsure, check with HR or your manager before diving in. Pensions and benefits. The fine print. Being employed typically means you're enrolled in a workplace pension, which continues as usual. You can also make separate contributions from your self-employed income, either into your workplace scheme, if allowed, or a personal pension. These payments qualify for tax relief up to the annual allowance, but statutory benefits like sick pay, holiday pay, and maternity pay only apply to your employment income. If you fall ill or take time off from your business, there's no automatic safety net. Sole traders might qualify for maternity allowance but not statutory maternity pay. Some people bridge this gap with income protection insurance. Student loans and child benefit, the hidden impact. Repayments on income-contingent student loans are based on your total income. If you're already repaying through PAYE, HMRC will review your tax return and calculate any additional amount due on your self-employed profits. The same goes for the high-income child benefit charge. All income streams are combined. For example, a salary of £34,000 plus £8,000 in self-employed profits totals £42,000, which determines your student loan repayments and whether part of your child benefit is clawed back. Insurance for your side business. Don't skip this. Your employer's insurance policy only covers your work for them. It doesn't extend to your self-employed activities. If you interact with clients or the public, consider separate coverage. Common types include public liability insurance for injuries or property damage, professional indemnity insurance for negligent advice, and employer's liability insurance, a legal requirement if you hire staff. Real-world examples. 1. The online seller. An employee earning £35,000 through PAYE makes an additional £8,000 profit from selling online. The salary is taxed at source, and the £8,000 profit is declared on their tax return. HMRC charges extra income tax and Class 4 national insurance on the profit. 2. The private tutor. A nurse working for the NHS teaches private first aid courses, earning £4,500 profit. Her hospital salary remains unchanged, but the training income must be declared. She checks her contract to ensure it's allowed and arranges professional indemnity insurance for her private work. 3. The part-time consultant. An office worker earning £28,000 a year runs a consultancy, generating £12,000 profit. PAYE covers the £28,000, and the £12,000 is declared on their self-assessment. With a combined income of £40,000, their student loan repayments increase, and national insurance is due on the consultancy profit. The controversial question, is it worth the hassle? While juggling a job and a side business can be financially rewarding, it's not without its challenges. From navigating tax complexities to ensuring compliance with your employment contract, there's a lot to consider. But here's the real question. Is the extra income worth the extra effort? Some argue that the administrative burden outweighs the benefits, while others see it as a stepping stone to full-time entrepreneurship. What do you think? Is the side hustle life for you, or is it more trouble than it's worth? Let us know in the comments.